One cannot imagine a blockbuster movie without its superhero, who fights against all odds and emerges victorious. In a similar fashion, you just can't talk about Nykaa without its Nykaa, Miss Falguni Nayar. Who could have ever thought that a company which was struggling with servicing even 10 orders a day and to which over 50 investors had said straight no would IPO in less than a decade from then, while also marking one of the most successful IPOs of India. This made Falguni India's richest self-made woman. How was she able to make it big in the beauty and personal care category when most people had written it off as nascent and not suited to the e-commerce model? How did she beat the erstwhile online giants who were already selling beauty products through their marketplaces? Let's dive deeper into this. The turn of events that led Falguni Nayar to start Nykaa were quite interesting. She started her career back in 1993 working in the investment banking division of Kotak Mahindra Bank, which grew rapidly under her. Recognizing her prowess, Uday Kotak, the MD of Kotak Mahindra Bank, also charged her with the responsibility of setting up Kotak Mahindra Bank in the US and UK by 1997, which she did successfully. Post 1997, with a wave of IPOs hitting the Indian markets, she was involved in actually facilitating the IPO process of several companies. Having a family background in business, she had always wanted to start something herself. The constant interactions with founders and business owners through IPOs further strengthened her will. And finally, in 2012, she founded Nykaa. She figured out that India's BPC segment was largely unsolved. She had several reasons to believe so. Back then, the two primary modes of distribution of beauty products were through organized and unorganized retail. Organized retail comprised beauty brands and setting up their own stores. On the other hand, unorganized retail denotes local stores selling a range of beauty products. However, these channels of distribution were limited to Tier 1 India. As a result, branded beauty products were largely out of access to Tier 2, 3 and 4 cities. You could argue that Amazon, Flipkart, which had already cracked distribution, existed back then, and they could have easily sold beauty products to places where they weren't available. Well, even online distribution was plagued with problems. First, these marketplaces would often send duplicate and expired products to consumers, causing a lot of customer discomfort. Secondly, there was a lack of adequate information about the products with respect to its features, specifications, use, and side effects. This did not build customer trust while they purchased beauty products online. As strategically sound as she was, she ventured out solving these problems through Nykaa by creating an extremely well-knit customer acquisition and retention strategy, the two key success factors of this industry. The cherry on top, it was profitable as well, owing to its business model, something that's quite unique for an e-commerce company. The first element of this was forging great partnerships with beauty companies. Today, it has over 2,500 brands on its platform with over 5 lakh products. Also, it utilized India's FDI policy as its point of advantage. Indian government restricts FDI in inventory-driven e-commerce models. Thus, while Nykaa could utilize the inventory-led model for its operations, online giants like Amazon and Flipkart could not and had to resort to a marketplace model. How exactly does this model benefit Nykaa? Well, given that Nykaa holds complete control over its inventory in its warehouse, the risk of duplicate, expired products is eliminated. Moreover, owing to the greater purchasing power that this model allows, Nykaa could procure products at a lower price and sell them at market rates, thus earning higher margins. This wasn't enough. Nykaa realized that online BPC accounted for just 8.5% of the total market, which provided sufficient space for other competitors to fit in. As a result, they switched to an omni-channel strategy, wherein they focused on building an offline presence. This would act as a differentiator by enabling customers to experience the products. Today, they have over 100 stores across India. Not to forget the wildly successful content play of Nykaa. They realized that there's a need to educate Indian women on beauty products. Towards this end, they implemented a content-led distribution strategy by onboarding beauty influencers and actors to talk about beauty products. This built trust, which led to higher customer adoption and also a higher average order value. It also created a beauty-based Nykaa community with peer-to-peer support for all beauty-related queries. In fact, there are over 1 million subscribers who engage with this community on a daily basis. This also serves as an excellent source of market research that has enabled Nykaa to launch its own in-house beauty brands and also in acquiring external brands to strengthen its product portfolio. And the results very well show the soundness of Nykaa's strategy and execution. It generated rupees 2,400 crore in revenue and rupees 62 crore in profit after tax in FY21. It is the single largest player in the online BPC category with a 30% market share, a segment which is expected to grow at a 37% CAGR. The online penetration is also expected to grow to 20% by 2027. It also houses the maximum number of premium BPC products compared to other BPC product platforms. Interestingly, Tier 2 and Tier 3 cities accounts for over 60% of Nykaa's gross merchandise value, clearly indicating how valuable access to these branded products is for these places. However, it won't be smooth sailing for Nykaa going forward. The game ahead may be different. While going mainstream to chase higher growth rates, it will get exposed to vertical competitors like Purple, MyGlam and Foxy. Nykaa no longer offers the best price online, and going mass may require a tweak in its strategy of less discounting. Moreover, accessibility isn't that big an issue now. To counter these, it is expected that Nykaa would be aggressive with brand acquisitions driving inorganic growth. It is also investing actively in the nascent male grooming category. Strengthen offline presence and warehousing capabilities would continue. This decade would also see a lot of mid-sized differentiated D2C brands rise in the BPC space, which would benefit Nykaa. It is also toying with the idea of exploring the fashion segment. What do you think? Will Nykaa continue to grow bigger? Or will the headwinds outpower the tailwinds that it enjoys? Let us know your thoughts in the comment section below. And if you found this piece of information insightful, do not forget to hit the subscribe button so the YouTube algorithm works in our favor. Stay tuned for what we have in store for you next. See you.